7:30 p.m. only on BloombergQuint.
Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The worldwide death toll post the coronavirus outbreak has risen to 132. Fresh cases have been detected in Germany and in Vietnam. India is preparing to evacuate its nationals, mostly students stuck in Wuhan. The Union Health Ministry says it will begin the process after getting approvals from Chinese authorities. Bloomberg reports that U.S. Trade Representative Robert Lighthizer will visit India in the second week of February to finalize the terms for a trade pact ahead of President Donald Trump's visit. Gold continues to trade near a 6-year high as investors look for haven assets amidst the concerns about the coronavirus. And Bajaj Finance, along with Bajaj Finance, will be reporting their third quarter numbers today. Let's quickly take a look at the U.S. markets now. They recovered some lost ground on Tuesday, rebounding from their worst one-day sell-off in nearly 4 months. The S&P 500 gained a little over 1%, while the Nasdaq outperformed, gaining 1.4%, led by shares, of course, of Apple post its earnings. Abigail Doolittle of Bloomberg News wraps up Tuesday's Wall Street action in this report.
Stocks rebounded in a big way in Tuesday's Wall Street session, with the S&P 500 up a little more than 1%. The Nasdaq faring even better, up 1.4%. The Dow up about 0.7%. So a bullish rebound after a couple of down days, in particular Monday, a big down day, a greater than 1% down day for the S&P 500 on those coronavirus fears. Traders looking past those concerns in Tuesday's session. Risk on, not just from the standpoint of stocks rallying, but we also had haven bonds and the Japanese yen falling. The commodity complex rebounded a bit too, oil a bit higher. However, copper, interestingly enough, Dr. Copper, often considered to be a tell in the state of the global economy, down for a 9th day in a row. That's the longest losing streak for copper going back to 2016. The worst losing stretch, down about 4% over that time period, going back to 2015, January of 2015. So basically in 5 years, on concerns that the slowdown or factories being closed in China are really going to affect demand for copper. Something to keep an eye on for sure. Something else to keep an eye on, the shares of Apple and post-market trading here in New York soaring up more than 5 to 6%, putting in an all-time high, at least on the post-market. Let's see what Wednesday's session brings. But the iPhone maker put up a very strong December quarter. They also put up an outlook that's better than expected. Details are in the early phases, but overall the reaction right now quite bullish. Not as much for AMD. Those shares falling in post-market trade. Investors must have wanted more out of the report and the outlook. The same is true for eBay and Starbucks. They put up a solid quarter, but initially shares higher than lower. Some fears perhaps around the coronavirus and the fact that they are closing stores in China. As for the Tuesday session and some earnings movers, Pulte Homes up 5.7%, a strong quarter similar to D.H. Horton the day before. Whirlpool up 5.7%. They raised the full year outlook. Xerox also up about 5% on strong results. And they say that they are pushing ahead in their pursuit of HP. To the downside, though, we do have 3M down 5.7%, the worst day since April. They revealed job cuts and a subpoena issued for the company, so investors not liking some of that news overall. F5, the networking company, down 5% on the company's outlook, a little bit disappointing. And Pfizer also, after trading a relatively flat, smaller declines early in the day, closing down 5% as sales of some of their key drugs disappointed. But overall, the major averages in Tuesday's Wall Street session sharply higher. The S&P 500 putting in 2 back-to-back moves of 1% or greater on Monday to the downside, and on Tuesday to the upside. So volatility is back, because after this follows, of course, a long stretch of complacency. It may suggest more big moves ahead for stocks in the days ahead. From New York, Abigail Doolittle, Bloomberg News.
Well, that risk-on sentiment that seems to be evident in the US markets is also evident in the Asian markets that are trading. Remember, the Chinese markets have been shut and continue to be shut for the Lunar New Year holiday, but the Hong Kong markets are trading today and they're playing catch-up. Down, the Hang Seng is down as much as 2%, more than 2% last I checked, down as much as 2.8%. But remember, it's playing catch-up. The other markets, the three early risers, that is the Nikkei 225, the Kospi in South Korea and the Australian benchmark, are all trading positive in early trade, indicating that some of that positivity that's coming in from the US markets is actually crossing over to the Asian side as well. But one of the big concerns that markets have and investors globally have is about the ongoing spread of the coronavirus. Governments across the world are tightening travel conditions in order to curb the spread of the virus. Chinese state media reports that the current death toll stands at 132 now. David Ingles of Bloomberg News brings you the latest.
Carrie Lam yesterday had a press conference in case, some of our viewers might have missed it. So tightening the borders, so what they're doing is they're going to close some border points. They're essentially restricting travel. And when it comes to flights, essentially what you're going to see is the number of flights from mainland China to Hong Kong will be cut in half. On the part of the mainland as well, we understand that the mainland China will suspend issuing those visas for mainland travelers to Hong Kong as well. And we also understand in terms of the timing there that Hong Kong, the effects on some of these travel restrictions in Hong Kong will take effect Thursday midnight as well. And among other things, of course, we're just also hearing, I'm just looking at my Bloomberg terminal right now, ASEAN, the Korean airline, also suspending flights to 3 Chinese cities from 2 days from now, so from February 1st. So you're getting a lot of these airlines, United being another one of them as well, talking about a massive drop in demand, which essentially leads to a commercial sense, them needing to cut flights as well, because people aren't willing to travel, of course, to China and as well here to Hong Kong.
Yeah, even here in the U.S., sources telling Bloomberg that the U.S. is not on the verge of banning China flights, but nothing is actually off the table, David. So what are we seeing in terms of how far this has already spread in Hong Kong? Because the numbers from China, whether it's a death toll or the confirmed cases, seem to be surging.
Yeah, well, certainly I think it's worth emphasizing that the number of confirmed cases in Hong Kong or elsewhere outside mainland China, and you are getting a trickle through, of course, of single digits in terms of confirmed cases, is nowhere near the number that we're getting out of China. We just heard from Sue Keenan earlier on the latest numbers as well. And I had a look at the data. The vast majority of those cases, and in case some of our viewers missed it, we're essentially now close to 6,000 confirmed cases. A vast majority of those cases are in the Hubei province where Wuhan is. Now, I also had a look at sort of provincial data. At least 7 provinces in mainland China have reported at least 100 confirmed cases. In terms of suspected cases, so they haven't made that jump yet from those people showing symptoms to now being confirmed, we're essentially over 9,000 on the Chinese mainland share. I have to emphasize that.
All right, let's turn to other news, this time from the United States. The 2-day meeting of the U.S. Federal Reserve begins today, and the consensus opinion is that the Fed will stick to the tried and tested path of keeping interest rates unchanged. Kathleen Hayes of Bloomberg News gets you the preview of the Fed policy.
Go back to December 11th when the Fed announced the new dots for 2020 and showed us that they have no plans to do anything on rates this year. Jump in and look at dots, go with me, and you're going to see that for this year, 2020, 13 of 17 say not a hike, not a cut, and the 4 who want a hike only maybe want to do one. Now, what they're saying, of course, is the economy's in a good place. Jerome Powell has said that we're not going to move anything on rates unless there's a material change in the economy. What we have is a strong consumer, they all say, low unemployment. Yes, investment is weak, and spending is the kind of the linchpin here, but that's where they're standing right now. And the question is Jay Powell going to give any indication the Fed is watching the coronavirus, the economic risk globally, to potentially change their stance? it may be too early. A lot of people are saying, of course, it's pretty obvious that it's already a pretty big near-term risk in Asia, particularly in China. It's interesting, I guess it was BNY Mellon said, if the Fed signals that, hey, it ain't going to change our stance view, you could see the dollar get stronger a lot quicker.
And while most people expect the Fed to maintain a status quo, Komal Srikumar of Srikumar Global Strategies expects the Fed to cut rates not once, not twice, but 3 times in 2020. He said this in an interview to Bloomberg Television earlier in the day. Listen in.
I said in December the Fed was going to cut 3 times in 2020, and that is still my expectation. They had said that they would not cut before the elections. But again, when did the Fed do what they promised to do? Think of December 2018. They were going to raise rates 3 times in 2019. It ended up with 3 cuts. So my expectation is there will be cuts. They cannot say that they are doing it during an election year. They cannot say that it is to support the equity market. But they have to explain it through the economy and inflation not picking up. Since inflation hasn't reached the target level for the last 11 years, it's a very convenient excuse whenever the Fed wants to cut rates. So my expectation is the Fed has essentially failed in its targets for the last 11 years, and they're going to expect them to continue to do that in 2020.
Yeah, the Fed may not use the equity market as an excuse, but I'm sure the equity market would rebound on any more cuts from the Fed. But I just want to get your thoughts on some comments by Scott Maynard of Guggenheim. He made them at Davos, and he was saying he likened asset prices and loose monetary policy of central banks to a Ponzi scheme. Do you have a few concerns about Fed-inspired asset prices?
Absolutely. I think the Fed, the liquidity provided the Fed is a major reason why the equity market is up. And think about what has happened since the middle of September, Paul. We had quantitative tightening until that date. However, the repo market crisis, the cash crunch, began in the middle of September. So from then, we have increased from a low of $3.6 trillion. We are at about $4.2 trillion for the balance sheet of the Fed. So yes, it is a form of a Ponzi scheme. It is essentially providing all the liquidity that is necessary to support the equity market without saying so. Now, if the Fed were really serious about the cash crunch, they should have found out what the basic cause of the problems were. But we still don't know what started the crisis in September. So all they are going to do is they are going to deal with a severe disease with painkillers rather than solve the issue.
Kamal, I think it was interesting that 2019 really was a theme of the U.S. versus the rest of the world. Do you see that still continuing this year as it comes down to economics and growth in the U.S. versus everyone else?
I think there is going to be more of a convergence, Taylor, in the sense that the U.S. economy is slowing, the rest of the world is not picking up, and some countries, large countries in emerging markets, China and India, are slowing as well. So if you think about the performance in 2019 that you referred to as one of divergence, namely the U.S. economy stayed relatively strong, and the other countries, especially Western Europe, did not. Now I think you have more of a similarity, more of a convergence in terms of their growth during 2020. So I think that is the expectation. That's why the global economic growth would be even slower than the 3% that the International Monetary Fund is talking about in terms of its latest numbers.
All right. Well, we'll see soon enough with regard to the projections in India. Remember, the budget presentation takes place on Saturday. Now, let's see what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Chinese state media says that 25 more people have died in the province of Hubei, bringing the nationwide death toll to at least 132. Hong Kong is restricting travel from China as the outbreak spreads. Chief Executive Carrie Lam says air, rail, road, and sea links to the mainland will be halted from Thursday as health authorities try to contain the infection. Now, the U.S. is telling travelers to avoid all non-essential trips to China. Meanwhile, President Trump has announced a plan for Middle East peace that he says provides a win-win solution to make Israel and the whole region safer. Trump skirted complaints that Palestinians have already rejected the proposal and did not take part in drafting the plan. The proposal offers the way to a two-state solution that leaves Jerusalem as Israel's undivided capital, but has been met with strong opposition from Palestinian leaders. Stronger than expected U.S. economic growth and an unemployment rate at a 5-decade low are going to contribute to an uptick in inflation this year. That's according to the Congressional Budget Office here in the U.S. Now, the CBO's budget and economic outlook through 2030 expects GDP to rise 2.2% this year. That's up 0.1% from its August estimate. And Nike says that its online store has sold out of Kobe Bryant apparel in the 2 days since his death, contradicting a report that the company had pulled merchandise to thwart profiteers. The website no longer shows Bryant products available for purchase, but Nike declined to comment on the volume or revenue. ESPN had reported earlier that Nike removed all Kobe products to prevent stockpiling by fans who hope to sell it later on secondary markets. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets now, and Agam Vakil is joining me to tell you all about the trade setup for the day and also to tell you what's happening in the futures and options space. Agam, it's been a volatile couple of days, and we're also in the expiry week, 1 day away today. How are we looking at the start of it?
Well, possibly we're likely to see such bout of short covering, and that's indicated in the gain seen in the SGX Nifty. What we saw yesterday was, well, again, you know, we saw about 0.5% cut, but the broader markets did not react as much. The Nifty banking indices also saw a mixed move, and when it comes to the ADRs right now, again, a mixed picture, not very different from what we saw day before. Not too much to speak for except for Vedanta and Tata Motors. It's moving on, in terms of the fund flows, what we are seeing is, a very large outflow from FIs, about 1,300 crores worth of selling on a net basis, and DIs buying stock worth around 712 odd crores on a net basis again. In terms of contributors, Reliance Industries, ICICI Bank and Bharti Airtel weighing down on the indices. We did see a sharp knock on some of the other telecommunication companies too. But what about the futures and options space? How are things panning out there? Let's take a look. And well, we do have rollovers picking up, but not substantially. A lot of traders are still hesitant to carry forward their positions, especially given the fact that the expiry comes before the union budget. So there are all sorts of guesses out there where we are likely to see a pickup in, the increase in the futures of February after Monday or Tuesday onwards. The same for the Nifty banking futures too. About 32% standing at rollovers. We're still looking at about a 300-point range, which hasn't obviously changed for now. That is between the 12,000 mark and the 12,300 mark. Of course, we do have a substantial amount of resistance around the 12,200 call as well, considering the accumulation. Yesterday's day of trade was where we did see a little more writing coming through since the Nifty came off from the levels of 12,100. What about your other factors? Let's take a look at the WIX, which didn't rise as much, but it's still above the mark of 17. It's at pretty heady levels and on expected lines. And of course, the Nifty put call ratio now moves below the neutral level of 1 at around 0.99. And in terms of stocks, we're watching out for United Spirits. It was a very strong day of trade and a lot of longs building in. The other stock which also did well yesterday was Mahanagar Gas. It's moved, from levels around 1,000 rupees per share to as well over 1,200 rupees per share in a very short span. The more longs building in. In terms of the short side, Torrent Pharma was under pressure, down 5.5%, and the other stock that didn't do well yesterday was Vedanta, which was also down 4.5%. So Alex, it was a mixed day of trade, and that's possibly what we can expect today as well.
Thanks so much for that, Agam. All right, on to stocks that you have to watch out for in trade today. Soumit Sarkar is joining me to tell you all about the stocks in news. Good morning, Soumit. What are you picking up today?
Good morning, Alex. I'll start off with the earnings. Firstly, Tata Coffee revenues were up 8%, EBITDA was higher by 54%, net profit jumped nearly 2.2 times. Now, if you see the segment-wise, plantation segment revenue was up 12%, while the value-added segment revenue was up 7% compared to last year. Now, lower raw material cost and other expenses did aid the company's EBITDA and its margins. And there was an exceptional gain of rupees 6 crore due to sale of non-core assets, which led the net profit higher 2.2 times. Mahindra and Mahindra Financial net interest income was up 10%, net profit was higher by 18%. Asset under management increased by 16%. However, the value of assets financed was down nearly 2% compared to last year. The NBFC also saw a slight rise in its NPA, mainly due to the commercial vehicle segment, and the management highlighted that the asset quality and cost control are the key near-term priorities for the company. JK Lakshmi Cement, good set of numbers. Revenues were up 7%. EBITDA was higher by 55%. Net profit jumped nearly 3.3 times. The margins improved due to lower power and transportation cost. Tube Investments of India, weak set of numbers. Revenue was down 25%. EBITDA declined by 10%. However, the net profit was higher by 32% due to reversal of a provision on taxes. Margins came in higher at 12.1% due to lower raw material cost. And if you see segment-wise, the cycle and accessory segment revenues were down 50%, while the engineering segment revenue was down 33% compared to last year. Cummins India revenues were down 4%. EBITDA was down by nearly 5%. Net profit was higher by 1.2%. Now, there was an exceptional loss of 16.4 crore due to a one-time expense on VRS, and that's the reason the company has reported this weaker set of numbers. Now, however, if you see the segment-wise, the domestic sales were up 4%, while the exports were down 16%. In other stocks to watch, firstly, Aircon, because the company will consider share split on February 11th. And in Bulldins, we have three stocks. Firstly, Gati, where All Cargo Logistics has acquired nearly 20.83% stake. La Opala, because HDFC Mutual Fund has acquired another 7 lakh shares in the company. And lastly, Narayana Rudhala, where DSP Mutual Fund has acquired 11.8 lakh shares, while SBI Mutual Fund has also acquired additional 65.4 lakh shares in the company.
All right, thanks so much for that, Soumit. Now, another stock you have to watch out for in trade today is going to be the Bajaj, or rather two stocks, Bajaj Twins. One of them, Bajaj Finance, is expected to report a 40% growth in profit in the December quarter. And this, remember, comes at a time when the larger financial system in India is facing a slowdown in credit growth and stress in certain pockets. Shefali Malik is standing by with the analyst expectations. Shefali, a couple of quarters by, they've guided about going a little more cautiously, and we've heard commentary from the head at Davos. How are we looking at the numbers, though?
Well, the numbers in this quarter are expected to be good only this time. The profit expectation of 1482 crores, which will be a jump of 40%, and NII expected to jump 25% to close to 4,000 crores. And what are the factors that will go behind these earnings is strong AUM growth of 35%, but mind you, even that slowed down from last couple of quarters. That is a pace of growth. So it was up 7% sequentially. They reported the same a few days ago. Customer franchisee for them at Q3 end stood at approximately 40 million versus 38.7 on a sequential basis. And during the quarter, the company had informed that they acquired 2.5 million new customers versus 1 million customers in the second quarter. So the pace of customer acquisition actually picked up in this particular quarter. The new loans came in at the new loan accounts booked during the quarter stood at 7.7 million versus 6.8 on a YY basis and 6.6 million on a sequential basis. So an improvement there as well in terms of the number of new loans booked. And apart from that, the benefit of capital raising will flow in this quarter and that will reflect in form of higher margins. But we can expect higher credit costs this time around on the Kavi exposure, even though they had converted that into a stake, but might be booked as an NPA, as we had seen that for ICICI Bank. And apart from that, we'll also look forward to commentary on growth, asset quality, among other factors. So these are the various issues and key points that we look forward to in Bajaj Finance earnings today.
All right, thanks so much for that, Shefali. Now, electric mobility is picking up, and you'll see that from launches that have happened. Hero MotoCorp backed Ather Energy launched its second electric scooter. That's the Ather 450X. It plans to expand operations to 24 cities in the country by the end of 2021-22. BloombergQuint's Nishant Sharma spoke to Ather's co-founder and CEO Tarun Mehta at the launch event in Delhi, where he spoke about the company's expansion plans to meet rising demand. Listen in.
So we've been in the market for the last 18 months now. We've had an extremely strong community that's popped up, of owners, enthusiasts, and we learned a lot from them. So we've been running constant events with them, and they've given us a lot of feedback, what works, what does not work. So there was like this community event that we did 8 months back, and I just asked people that, because people are saying, can you give us even faster acceleration? And I asked, how many of you genuinely want like an even faster mode? I have the picture somewhere. It's amazing. Like 150 people in that room, everybody's hands up, right? I'll pay for more acceleration. And that's the insight for us. We thought 450 was like this path-picking product, and realized we could probably do even better, and people are willing to pay for it. This is crazy. People expect that of electric. Other thing is, we've had 6 million kilometers of on-road data from our customers, right? And that's taught us a lot, right? I don't think there's any amount of internal testing we could have done that would have matched this kind of learning from the ground. So between them, we've improved performance. We've improved things like acceleration, handling, everything significantly. The on-wheel torque has gone up to 200 Newton meters. Right? We've improved the dashboard and the smart capabilities immensely with Bluetooth, with accessories, with 4G, with better touch, Android, everything. And we've improved charging speed, and now we have a new business model.
And you also refined the pricing as well, right?
And refined the pricing, right? We want to make sure that customers could buy the product itself at a lower price, at the same price as a petrol scooter. And we created these subscription plans where they can spend about the spend as what they spend on petrol, but then they have a vehicle that's obviously a far superior vehicle. But under subscription, we are able to give our customers an infinite battery guarantee. And that's a big deal. Like today, a lot of customers are really holding back the EV purchases because they're not sure. Maybe at 3 साल battery ka technology change होएगा, this battery won't last. Maybe 4th year I have to spend a lot of money to replace battery pack, and that scares a lot of customers out. We don't want to lose them. So what we're telling them is, take the subscription. Your cost is covered under it. We'll take care of the battery. We'll take care of performance, charging, everything, right? An assured performance, assured experience guarantee. At the same cost as what you would spend on any good petrol scooter in the market today.
So once you buy the vehicle, you're sorted.
You're completely sorted.
So that'll be an added cost for you as well.
That's added cost for us, and that's so we structured the business plan very differently this time. So we're taking certain bold bets here. So we're taking a big bet on our technology capability, and from what we have seen, what I've seen as data, I think this will deliver.
Right. Talk to me about the expansion plan. You're moving big expansion plans now, right? 8 cities that you're eyeing for?
Yep. So we're adding 8 more cities. So we're in 2, we're adding 8, going up to 10 cities this year. This time, as we grow there, we're inviting more partners to set up Ather experience centers in their cities. Right. So we're setting up a different business model with them. They're also going to be running servicing for us. We are in parallel also expanding our charging infrastructure in all these cities. We're going to begin with 10 to 12 points per city, and a place like NCR, probably 20-30 points in an NCR. And then we're going to keep adding every month. Right?
Over the period of this 20-30 points will be coming in Delhi NCR in a year's time?
By July.
By July we'll have 20-30 points. Awesome. And also kind of investment you're making to set up these expansion plans, experience centers, and Ather Grid obviously.
So I can't share all those numbers, but on the production side, we'll be spending somewhere in the range of 40 to 50 crores this year to add an incremental 1 lakh capacity to our existing plant. And as we expand every city, there will be a little bit more investment on the charging infrastructure side. On the experience center side, on the servicing side, those numbers are still to come in because we're partnering with people, so investments would be done in a different way.
And give me a sense of the kind of traction you've already received for the vehicles. How many buyers are there of the existing
We won't be able to share numbers.
What about pre-orders of this vehicle?
Unfortunately, I can't share that. What I can say is the response being crazy. So let me give you this metric. We opened up pre-orders for 450X about 3 weeks back on an invite-only basis, not even on the website, only on people who already know us, and the message started spreading, obviously. So we shared more invite codes. And despite that, we've had more pre-orders for 450 in the last 450X in the last 3 weeks than we have had for 450 in the entire last year. Right. So there's been like a 20-30 times jump in the pre-order interest. I think that's saying something on the market. Like the market's become so excited and curious about electric that people are willing to buy. They want to be one of the first ones to get a good electric vehicle now. Right. So I think interest has been very high, which is why we actually were planning to open up the Hosur plant gradually, take a year, aram se capacity lagayenge. But now we're saying like, listen, if you want to deliver like 30 or 40,000 units this coming financial year, we need our second plant coming up by later this year. Otherwise, we won't meet those numbers. So we're already starting to invest there quickly.
All right, tell us what you think about electric vehicles. Would you ride one? In the meanwhile, let me take you through some of the stories you'll find on the website BloombergQuint.com. The Bombay High Court rejected Kotak Investment Advisors' petition challenging the Insolvency Court's approval for a resolution plan for Rico India Limited, saying that the alternative assets manager should approach the appellate tribunal instead. And speaking of bad loans, social unrest and protests in Assam have led to an increase in delinquencies for banks and microfinance lenders across the state, according to ICRA. And the rating agency also says that the share of the portfolio which is overdue between 0 and 30 days rose sharply to around 10% in the quarter ended December 2019 from 1.5% in September, and loans which are 30 days past due rose to 2% from 1% over the same period. All right, that's all you need to know going into trade today, but do stay tuned. There's still lots to talk about, and you'll find all of that right here on BloombergQuint.